Hello ICT traders, you are highly welcome here. If you are a beginner in ICT concept, and I mean a complete beginner who is looking for a way he can get a sequential arrangement of ICT concept in such a way that it becomes easy for you to become a professional trader, then this is the right place for you, because I will be doing something very powerful for you. I want to make sure that I arrange all the ICT knowledge for you in this YouTube channel. I want to go through these things. These are the things I want to do in this YouTube channel. I want to go through ICT core basics, and then ICT intermediate, and then ICT advanced. I will make sure that I arrange every single information in a sequence that will benefit you to become a professional trader. Of course, I've been a student of ICT for a while, and I've gotten access into ICT's premium content. You can actually see this is ICT's premium content. In the mentorship, we have almost 12 months of mentorship, and then we have the charter school, we have ICT live session. Everything in ICT premium content can take you more than 2 years to finish. This is a very bulky information for you to assimilate, but what I want to do is to actually shorten your journey and give you the best. And of course, you can get so many valuable videos from ICT's official YouTube channel, but right here I want to just shorten your journey and give you the exact thing you need to become a professional trader. I'll be going through the sequence. So this is the first video right here, and I'm going to be giving you the first thing you need to know about ICT, what ICT really teaches. But this is not Forex for beginners. If you want to learn Forex for beginners, you can go to babypips.com. babypips.com. That is where you're going to learn about pips, you're going to learn about lot size, how to calculate your position size, and you're going to have basic knowledge about Forex trading. Now, these are the things we want to do in this particular video. We want to go through the very core basics of ICT concept, and that is about components of price delivery. This is the first thing you will ever see from ICT's video, and this is a way of telling you that the market always, whether you're trading in the Forex market, you're trading in the stocks market, or you're trading in the crypto market, it has a direct relationship with these four things. There are basically four components of price delivery that appears consistently across all financial assets. And these are the things you will get to know: consolidation, expansion, retracement, and reversal. Nothing is outside this, and that is exactly what ICT taught. I'm going to be going through every single of these items so you can get it in detail. So let's start with what is consolidation. If you have ever looked at your price chart, whether you're trading in the Forex market, whatever asset you're trading in the financial market, you might have heard about consolidation, and that is basically when price stays within a defined trading range and exhibits little or no willingness to go noticeably higher or lower. That is when a consolidation occurs. If you've ever seen where price is just bouncing between two levels, okay, you can actually see this is a typical example of what we call a consolidation. Other people calls it a ranging market. And when this happens in the market, it is basically known as accumulation stage. That is where the smart money are trying to accumulate order before they deliver it to the other side of liquidity. You can always see after a consolidation or a range, price will just break outside it and deliver liquidity either to the upside or to the downside. So this is what we call the accumulation stage, basically where the orders are accumulated. Before you can buy something, you need a seller, and before you can sell something, you need a buyer. And that's exactly what is happening in a consolidation. If you want to buy, you need somebody that can sell for you. So we can call this place the money spot, where buyers and sellers meet, and then the smart money plays the biggest game in this kind of environment. I hope this is explanatory enough for you. So a consolidation is typically seen here. When I go back to the chart, I'm going to show you everything in detail. I want to make sure that I break it so you can get an understanding. So in such kind of scenarios, you can see price bouncing between two refined and predetermined levels. Okay, so these are the levels you can see. And then the next thing is expansion. After price has consolidated for a while, that is to be within a defined trading range, as you can see here, you always see an expansion. Just like I told you, before you can buy, you need somebody to sell for you, and before you can sell, you need somebody to buy from you. You can see price break out of this consolidated range, this range. That is, the smart money have gathered enough order and then they are delivering it to the next direction. Now, what we want to do in this YouTube channel is to show you the very knowledge behind every expansion and why this is happening and how to use this information to make money in the market. That is basically the goal of this YouTube channel. So expansion happens right here. This is an example of expansion. You can see price, when price suddenly moves away from a consolidation or accumulation level, this is known as expansion, and that is exactly what expansion is. Straight to the point. The next thing is retracement. You've heard people say retracement. Now, retracement occurs when price returns to the most recent traded range. Simply put, it is the movement that occurs following an expansion. Okay, this is a range. Expansion happens and then it is retracing back into the range. Okay, from here to here on the retracement, it's simply saying it is going back into the range. Why is it going back? I will show you exactly why this is happening. When retracement happens, it is basically trying to get some of the order that is left out, because you don't always get what you want to buy at a time. Sometimes if you go to market, you need to get it maybe in tranches. Assuming you have $10,000 right here that you want to use to buy something, and you only got $5,000 worth of what you want to buy, and price moved from here to here. As price comes back, you still have $5,000 left for you to fill out everything you need. So retracement happens because price is trying to come back and get the rest of the money you have. It's an opportunity for you to buy or to sell whatever you have. I hope this is explanatory. If you have 10 oranges you want to sell, and from here to here you were able to sell 5, price is coming back here for you to have an opportunity to sell the rest of the 5 that is pending with you. And that's basically why retracement is happening. Price came to this area, nobody sells at a cheaper price right here. Let's assume right up here price is almost $100 per orange, and then it dropped to $10 per orange. Nobody wants to sell and lose money. Price comes back, it's an opportunity. It's coming back to $90. It's an opportunity for you to sell, and then it sells. Price will always give you this opportunity. The next thing is reversal. Reversals happens mostly when price completely change its current direction. You can actually see this is an example of reversal. Moving, changing direction, moving, changing direction. It takes longer time than retracement. Price can move in a certain direction for a while and then change the direction once it reaches some certain level. So this is simply what reversals are all about. Price move from here to here and then reversed, move from here to here and then reversed. After this video, I'm going to make a video to show you how to understand the structures, and that is where you're going to get detailed explanation of what are structures. This is basically the very beginning of everything you need to know about ICT. So if I go to my chart right now, which is right here, you're going to see every single thing I just explained to you. It happens almost every day. Look at this. This is what we call a range, this place. Can you see price is just between these areas? And there are traders that trade in ranging market, taking opportunity of range. They buy and sell here, but this is an expansion. It just break outside here and it's expanded right there. Right here, you can actually see after expansion, retracement coming back into the area, the range of that trade. So this is what we call retracement. Okay, so we have consolidation, expansion, retracement. Everything I just showed you is represented right here, regardless of the time frame. Don't worry about time frame. In the subsequent videos, I'm going to show you the effect of time frame and how you can possibly apply it to your trading experience. Okay, so you can actually see everything I showed you in that video right here. This is another consolidation. Consolidation happens every day to show you that it's an opportunity for traders to gather enough money and then to buy or sell. So you can actually see consolidation, expansion, retracement, expansion, and then price is retracing into that trading range. You're going to see it time and again. And for you to see this, you're going to see places where price actually reversed. From here to here, there is a complete reversal in this movement, even up to this level. So this is reversal. You're going to look at your chart. Kindly look at your chart. Don't just trade blindly. You need this knowledge because it is the very foundation of everything you're doing. Why this happens is because, look at this. Let me show you something. If from here to here, price moved from that level to this level, let's say this area, okay, this works on every asset, anything you are selling in market. Let's assume this place, I have an iPhone, is being sold for $300. Let's say an iPhone is being sold for $300 at this point. Okay, you have an iPhone store that you're selling, then you keep selling it. Price is reducing as it comes down. Price is reducing as it comes down until it reaches this level where it is being sold for $20. Okay, no merchant will want to keep selling from $20. You want to have, access to people that can buy it expensively, and you allow the price to go up again. Let's assume from here to here, this is 300, this is $280. Okay, $280. So price actually comes back to 280. That's why you want to sell again. At this point, you're no longer selling. You might have probably closed your store so people can start demanding for it, because scarcity will always create demand. As people see that there are no iPhones in the market, let's say iPhone 14 or iPhone 13 Pro Max, from here to here, people will start demanding for it. Scarcity of this iPhone now at this area will create more demand, and the price will go up, and you want to sell from here. 280 is a fair price, and that is why you see price, after moving in a certain direction for a while, it changes direction, it comes down to almost $10. We can call this place $10. So it comes to almost $10 per one iPhone 13 Pro Max. And of course, scarcity will always create demand. And look at it, price is moving back again. It even moved above the past price of 300. Now it's here. I'm just explaining this to you in a business term so you can see literally what is happening on your chart. But when I go deeper into explaining what is price delivery algorithm, this algorithm is designed to do this. It doesn't move in one direction forever. It gives you opportunity to buy and then creates scarcity and moves. And this applies to any financial asset at all, or any business franchise you're doing. So guys, this is all about the first video. If you're yet to subscribe to this YouTube channel, you want to get a sequential arrangement of all the ICT knowledge that will help you to become a professional trader, then be sure you subscribe to this YouTube channel. This is actually the first video I want to drop in this YouTube channel. I want you to kindly subscribe and have access to every single knowledge. I will make it in a playlist. I will make sure that all the videos you need to become a professional trader will be in this playlist, and that is the beginners, the advanced, and then the intermediate. Let me show you all those things I said I will teach: ICT core basics, ICT intermediate, ICT advanced. So this is the first video you need to know, and that is for you to get a very basic understanding of what is happening when you see price delivering liquidity from one place to another. Thank you guys for watching. I'll be making the second video immediately after this one so you can get every knowledge sequentially. Thank you for watching. See you in the next video.